if you are still saving all of your money in a bank account, like your regular savings account, you are definitely shortchanging yourself. And why would I say something like this? Since the bank is all that we know, it is safe, it is this, it is that. Cousin, cousin, of course you know that I'm going to give you like the best of the best deals, the best of the best information when it comes to money, because on this channel all I talk about is money, how to save, how to budget, how to invest. So you might be wondering, why exactly would I be telling you that you should stop saving your money in a bank and do this instead? So this is what the bank does not want you to know. So they tell you, oh, keep your money here for this percentage of interest per year. And you guys don't even check like what is the exact interest rate that these banks give. On an average, as at 2022, banks, like the major banks, gave like up to 1%, less than 2% per annum as interest though. This is like after you keep your money, the big money you keep, you're getting 2% for the whole year. And banks give you like different charges, from maintenance fee to stamp duty to transaction fees, but you don't get as much interest as you should, even though the money is safe. So I'm going to be telling you where you can save your money apart from your bank account. So this is what the bank does, just in case you're wondering why I'm telling you this. This is what the bank does. So you keep your money there as a deposit for some time and you get a particular percentage. But then your friend needs a loan. Let's say she needs a loan and she goes to the bank to get a loan, and then they charge her a particular interest rate for that particular loan. And what they do is that they take A, B, C, D, little amount of money from A, little amount of money from B, little amount of money from C, and give to Chi that needs a loan and charge her exorbitant rate as interest. And when she decides to pay back and pay with the interest, this is what they do. They give us peanuts as the interest rate. So I'm not trying to tell you that, oh, let us be greedy and all of that. I'm just trying to enlighten you, to let you know that there are better options than keeping your money in a bank. Instead of you to be getting only debit alert and paying for transaction charges and all of that, these are other things that you can do with your bank account. Or rather, these are other things you can do with the money that should be kept in your bank account. You can actually still use your bank account as your spending account, where you need to just do transactions and all of that, but you should start looking at ways to keep your money in a high yield savings account. So I'm quickly going to explain what a high yield savings account is. A high yield savings account is a type of account, a special type of account that you put your money in and you get a higher interest rate. And why would you get an higher interest rate on a high yield savings account? Because if your normal savings account does not give you like this interest rate, what are they doing differently for the high yield savings account to give you that particular interest rate? I'm going to answer. Calm down. So a high yield savings account will give you a higher interest rate because there are some terms and conditions for you to be able to use high yield savings account. So a high yield savings account would generally give you anything higher than 5% as interest rate per annum. And this is because on your high yield savings account, you do not withdraw every time on it. You keep a particular amount of money for a period of time, so a minimum of a month, and that money does not come and go from the account, it just stays there. And then on your high yield savings account, another thing that happens is that you don't exactly get a card that you use to remove money from. So all of these things actually adds up to like charges that end up being removed from your account from time to time. This is what happens with your high yield savings account. It's just one account that you just leave and you don't exactly touch at every single point in time. So this is why you get to have higher interest rate on a high yield savings account. So instead of saving your money in your regular savings account, then you should consider using a high yield savings account. Okay, so another place you can actually keep your money apart from your savings account that is sure to give you a higher interest rate is the commercial paper. These commercial papers are a short-term debt instrument that are issued by large banks or big corporations. So it's more or less like a unsecured promissory note that offers a fixed interest rate. So when you want to buy a commercial paper, somebody, corporations or the government needs a loan, so they raise up a commercial paper where when people bring together their funds, they're like, okay, this is what you're going to get in interest after this particular period of time. So commercial papers are actually one good way to get higher interest rate and also save your money, because it's better than it just sitting idle in a bank, and they are more of lower rate. Their risk is better than just leaving your money idle. Their risk is lower when you want to actually compare it to other sorts of investments, and it's better than just keeping your money idle, right? And the last but not least on my list of places you can keep your money apart from your savings account, your regular savings account, is in your federal government bond. So the reason why this is added is because federal government bond, of course, is supposed to like be secured and all of that, and they're supposed to offer you like a particular return which is typically higher than what you would get from your regular savings account, and your funds are more or less, like I mentioned just now, secured. But with the current situation in the ground, this might not actually be what you want to like tick as your first option, because the interest rates are not as good, the value of bonds now are not as great. But then it's something you want to put into consideration for the future as time goes on, when things get more stabilized. The reason why I had to like explain this is because I want the best for you, cousin. I want you to just have this information. I've had most of this information for God knows how long, but I did not use them. I don't share them, and why? So that is why I'm giving this to you on a platter, cousin, so that you can know these things. And you can also let me know which of these things you find interesting, or which of these things you like to have more information about, and I can actually share them. But I'm actually trying to make this video as short as possible to ensure that you get as much value in the shortest possible period. Yeah, so let me know if you found this video useful and which of them you'd like to try out. And don't forget to like, share, comment, subscribe, and turn on your post notifications so that you'll be the first person to know when I post the next video. And this is because this channel is all about money, from saving, budgeting, investing, everything you can think about money, you're going to find on this particular channel. So thanks for watching this video, and I'm going to be seeing you very soon, cousin. Bye for now.